Sun Pharma posted what was a good set of Q2 FY23 numbers. Net profit and EBITDA rose, although the margin remained flat. I did catch up with the CFO, the Group Chief Financial Officer of Sun Pharma, and began by asking him about the quarter gone by and how they see growth going ahead, especially for the specialty business. Listen in.
Just to set the context, in the current quarter, our gross sales were 108,092 million, up by 13.1% year-on-year on a like-to-like basis. This strong growth has also fueled the EBITDA, which grew by about 12.4% with a margin of 27% EBITDA margins. That too after absorbing the adverse movements in the forex currencies and lower other income overall. As far as the revenue growth is concerned, specialty business did $201 million, up 27.5%, supported by strong performance from Ilumya, Cequa and Winlevi. And these products have performed well and meeting our expectations. Further, it's important to also note that the global specialty consolidated revenues is currently 15% of the global consolidated revenues for us, up by about 2% compared to a couple of quarters ago. And with newer indications coming up, particularly for Ilumya, we also strongly believe that the current growth trajectory of Ilumya would be sustained.
Okay. So you're talking about Ilumya in specific, but if you are probably going to do $200 million or plus in terms of global specialty sales in the next 2 odd quarters, do you think you're on track to probably achieve $800 to $850 million totally in terms of global specialty sales in FY23? Do you have that visibility?
So, in terms of, you see the trajectory for the last 8 quarters, we have maintained our growth momentum in the specialty business, which is fueled by not only Ilumya, but by Cequa and now by Winlevi. And we also saying that with the additional geographies which we're expanding for Winlevi, which we have recently signed, plus also we have launched Cequa in Canada and Ilumya in Canada, which is also doing well. We are poised to sustain and maintain our growth trajectory.
Okay. You have mentioned that you would probably look at in-licensing, out-licensing opportunities when it does come to the specialty business. M&A might be something on the cards as well. Can you elaborate?
Yeah, we continuously look at opportunities to expand our specialty product portfolio by looking at candidates for in-licensing the products, which makes both technical and commercial feasibility for us. It's a continuous ongoing process, and that's one of the outcome of that was the Winlevi in-licensing and launch. And we are looking at opportunities on a continuous basis. And as and when we have a compelling proposal, definitely with the strength in the balance sheet, we will not shy away from doing those transactions.
What about Taro? Because that was a disappointment this quarter. Can you guide investors in terms of what the trajectory for Taro would be?
So, unfortunately, Taro also being a public company, we cannot disclose more than what they have already disclosed in the press release post the Q2 results. Taro has very clearly mentioned that there has been impact on account of the price decline. They continue to face competition headwinds there in their generic business. They also disclosed specifically that there was a one-time gross to net adjustment and which impacted their overall top line and bottom line. And of course, the consolidation of the Alchemy acquisition, which is part of the current quarter but was not there in the previous year. So these are a couple of factors which has resulted in the overall, I would say, the performance of Taro in the current quarter, which is already shared by them in their press release.
Okay. The performance of Taro also reflects probably the US generic pricing pressure situation. Can you give us more perspective in terms of what the price pressure is like in the US at this point in time, and what are you guiding for in terms of your US portfolio, inclusive of maybe Taro?
So, as far as ex-Taro, we would like to comment from a pricing perspective. Price erosion, as we have maintained it in the past, is quite product specific. but the market continues to remain competitive. However, we also mentioned that our ex-Taro Sun US Generics business has grown, which is on account of combination of a couple of factors. We had good new launches in the market, plus we also had efficient supply chain management, and more importantly, because of the focus on cost, we are able to also gain some market shares in our existing portfolio.
Okay. If you did around $412 million in terms of total US sales this quarter, will that be a base? Will it probably be $410 to $415 million in the next couple of quarters? Or do you think you can push it up to around $420 to $430 million? $420 is what you did in Q1. Are you probably going to get back to those levels?
Our efforts as far as the US business is to further grow, definitely. But then, as you rightly mentioned, we have to see in three segments the US business. One is the Taro, then the Sun US Generics and Specialty. So our focus is on all the three businesses, irrespective of the headwinds, to make them profitable and grow. And we are confident, and our strategies are different for these three businesses, because the portfolio also varies and overall the strengths also varies for these three businesses.
Okay. Margins, you did 27%, but you're guiding for higher R&D costs in the second half. What is a sustainable level?
So with further ramp up in R&D, which we are expecting in Q3 and Q4, you are right that there could be further increase in R&D spend in the current fiscal FY23. However, as we have mentioned earlier, our continuous efforts is to focus on efficiencies and also grow profitable businesses. Even with potential ramp up in R&D spend in the remaining quarters of FY23, our endeavor will be to find ways and means of maintaining margins. And I think that is demonstrated by, if you see the EBITDA margins of last 6 to 8 quarters, we were independent of unforeseen forex movements or other aspects of spend, we are able to maintain and demonstrate consistent margins at least. So I think we are working towards that to maintain and further grow our margins.
Okay. Halol, the OAI or official action indicated status continues?
As of now, we are in the OAI status and we are working with the regulator in addressing the remedies and responses towards that. And we will wait and watch as and when it unfolds and we get back to the VA status. As mentioned yesterday in the earnings call, it will take some time. We are working towards that.
Okay. Is the company in a position to probably revise guidance upwards based on what you are seeing in the specialty sales segment?
No, so if you see H1 growth, we are guided for higher single-digit and lower double-digit growth for the revenues in the current year. If you see H1, our growth has been definitely in the level of where we have guided. So we would like to maintain the same guidance at this point of time instead of revising in the midterm.
Okay, so that's the management of the top gainer on the Nifty today. Sun Pharma, which is sitting at a fresh 52-week high, post its Q2 numbers. The company is sticking to that guidance which they had provided earlier. And they are saying that, yes, R&D costs are probably going to be higher in the second half. So let's see how the margins probably weigh down on account of that. But bullish on the specialty sales business. And in fact, the street is now estimating that maybe they could do $800 million plus in FY23 from that particular segment. Need to take a short break on that note, but we'll